Hello everyone, welcome to this property market update for Cairns for November 2022. So we're coming towards the end of the year, but I think, yeah, you probably can get some really good value as to see how the market is tracking after a couple of consecutive interest rate rises. Obviously, there's been a change in sentiment across Australia as a whole. So we want to take a deep dive into Cairns to sort of see what's going on there and take a real, I suppose, data-driven approach to sort of diagnose what's going on in the marketplace. You might have seen in the news or you might have heard different real estate agents speak anecdotally about the property market, but today let's use a bit of data to really give us an understanding of what's going on. Hey, I'm keen to dive in. But if you are a home buyer or investor, or you plan on buying a property very soon or selling, then I think you're going to get a lot of value out of what's going to be produced here today and covered off as part of this market update, to really get a grasp on some of the data, and it's going to really paint a picture as to sort of what's going on, and then you can in turn make a decision as to what you would like to do, whether you want to buy or sell. All right, guys, let's dive in. So this is proudly brought to you by Tropical Life Buyers Agency. My name's Troyson Bassini. I am the owner of the business. We're based in the Cairns CBD, and we work exclusively for property buyers, in fact. So we provide a service where we can represent you from, let's say, right up from search to acquisition of real estate and represent the buying side of the transaction. And we generally help, struggling home buyers, investors, interstate buyers, and those that are geographically challenged. You can check us out on our socials and website, or give us a call on that number if you feel as though you might need some help navigating through this marketplace. Always happy to help and have a chat. But let's dive in, guys. As I said before, it's going to get pretty deep and heavy, and we're going to get down and dirty into the data to really sort of paint a picture as to sort of what's going on. We're going to look at the demand side, look at the supply side, look at the rental demand, look at the rental supply, and then sort of then create a summary as to sort of what's going on in the marketplace from there. Hey, let's get it. So the key things here, as I said before, I want to cover off on is a whole bunch of data so that you can make a really well-informed purchase decision. So we're going to cover off on median price, look at sort of the listing volumes and what's the stock look like, the days on market and those trends, and seeing what that tells us. Auction clearance rate, although that's not a big deal, particularly for regional centres, it'd be good to sort of unpack where that's sitting as well, just for the Cairns marketplace. We're going to sort of, once we sort of cover off, demand and supply, we're going to really get a bearing on what the absorption rate looks like, and I can cover off on what that means exactly for those that are unsure or unfamiliar with a lot of these data points. We'll look at the vacancy rates in the area from the rental side. What's the median rents doing? Are they changing? Are they going up and down? We're going to look at some of the things that are happening from the supply side as well, that's in the pipeline, and how that could affect future supply demand, whether it's in the short term or the longer term. And then we're going to finish off with a bit of a summary around what are some of the trends that we can take away from what the data is telling us, and then hopefully you can make it then an informed decision whether or not to buy or sell in the immediate future, and then get some value from what we cover off on today. So let's start off with the median price in Cairns. So as of, I suppose, November 2022, it currently sits at $674,000. So it's actually up from $665,000 in July 2022. So over the last 3 months, we've seen a 1.2% increase in the median, I suppose, house price for Cairns. And this is despite consecutive interest rate rises. So for those that might be under the assumption that, hey, the market's slowing down, or it's tanking, or it's going to crash, it's from a price point of view, the median price point of view, and from what the data is telling us, it's actually quite the opposite that's happening. So we're actually seeing a trend that's inclining over time here. And as you can see, we're sort of here in November 22, and who knows, no one has a crystal ball as to sort of where it's going to go, but as from what we can see over the last 3 months, we've certainly had a price increase, and this median price is growing. But when you look at the median price as a whole, it's the midpoint of the marketplace. So that I suppose $674,000 figure there, that's noted, is actually being, I suppose, dragged up by properties that are selling for well over above 700,000, and then dragged back down by properties that are selling for sub 500, creating that sort of mid range or that median of 674,000. So that goes to show that there's probably a healthy level of transaction volume up on the higher end as well as on the lower end to create this growing midpoint. If the property if the median price is growing, then we're actually probably seeing a higher transaction volume of properties that are selling for a lot higher than, let's say, 700,000, and it's dragging up that median price over time, and it's grown over the last 3 months to 1.2%. So yeah, despite consecutive interest rate rises, we are seeing this marketplace continue to, I suppose, show some resurgence despite those sort of headwinds. So that's the median price. From a supply point of view, stock levels are sitting at 0.4%, which means that there are approximately, I suppose, 246 houses currently listed in Cairns for sale, and it's just under the 2-year average of 0.5%. So we can see here this trend line through the middle of the total listing volumes, I suppose, or the stock on market, and then we can see that it's sitting really low and just under the 2-year average of 0.5. I think this is from a stock level point of view, it's a natural thing for stock to taper off, particularly around the Christmas period. A lot of people decide not to sell over that Christmas period, so they sit on their properties and probably wait for the new year. So we're probably this sort of drop off under the average probably has a lot to do with what's going on at this time of the year with people's selling behavior on the sales side. So that just goes to show, like with a population of more than 150,000 people, and for any given time to have roughly, the best part of 200 to 300 properties on the market for sale at any given time, just goes to show that, that level of supply is really low, or that level of stock that's coming onto the market relative to the population is very low, and it's sitting well above 1%. So that's showing good signs from a supply point of view in terms of ongoing capital growth, particularly those that are interested in investing in Cairns. If supply continues to remain low and demand high, then obviously that creates a nice recipe for capital growth. But yeah, that's something to keep an eye on, guys, over time, is these stock levels and how they are trending. We'll look at the inventory levels. So they continue to show a downward trend with roughly, right now, 1 month's worth of inventory available in November 2022. So based on the velocity of sales, right, what this is telling us is that based on the velocity of sales and the turnover over a stock, where Cairns has roughly around 1 month worth of stock currently on the marketplace. So if the market were to just go into redundancy tomorrow, and the only properties that were for sale going forward were the ones on the marketplace today, it would be all cleared out in a month. It would be cleared out in a month, and we're seeing this downward trend, since 2020, of inventory just continuing to go down, and that's probably actually has a lot to do with what I'd probably say could be caused by, this is just my thinking, of what's happening on the rental side of things. People that are maybe considering to sell don't want to sell because there's just nowhere for them to go, or they're probably buying back into a heated market. So rather than putting their property on the marketplace, they've decided to hold onto it, and it's causing this real tightness of inventory levels. And we're seeing this continue to trend downwards, and if it continues to trend down, then that's probably going to be even more alarming, particularly for those that are buying in the immediate future, because that's just going to continue to place downward pressure on existing supply. And when you have low levels of supply with consistent demand, then you're going to be in situations where people are always fighting over property and paying offers over, driving up the market still. So we might, as a result of these inventory levels, continue to see the market surge on potentially. But that will give you an indication on what's happening from an inventory point of view, and the associated trends there for the Cairns marketplace. So if we look at the demand side metrics, days on market is a really good indicator to sort of grasp how the market is performing. And right now, days on market sits at 54, and it's actually the highest it's been since 2022 after a long downward trend over the last 24 months. So you can see here that over the last 24 months, yeah, days on market has been really, really low, and then all of a sudden it's jumped from, the best part of, I'd probably say 30, 35 days up to 54 days. So that could be an early sign, or an early lead indicator that the market is showing signs of cooling. But when you look at it, right, when the market was averaging the best part of, throughout 2021 here, all the way basically up until, I'd probably say, August, September, averaging around 30 days on market, that essentially means that properties that would come onto the marketplace would generally take the best part of 7 days to sell, if not a lot quicker. Because if you look at the average contract time, generally, you put in, 2 weeks to, do billing and pests and finance, and then, usually, an additional, 14 days after that for settlement. So a total of, 30 days generally, when the transaction is changing hands from, seller to buyer. So, Cairns has been in a very heated market there for the best part of 12 months, where properties would sell, in the first couple of days of it going online, to now I'd probably say dragging out to 54 days. I'd probably say that properties are now probably taking roughly, 2 to 3 weeks to sell on average, as opposed to selling within the first few days of it going live. So that could be an early indicator that we might be seeing a cooling market here starting to play out, particularly in Cairns. So the days on market, yeah, let's say if you're buying in a particular suburb of Cairns and you're trying to get an indication of, how that suburb is performing, particularly for investment purposes, I'd recommend, looking at this days on market metric. And if the days on market are super low, and then the trend line is just showing that it's continuing to go lower and lower, but generally it can't go beyond 30 days anyway, and unless there's a lot of unconditional contracts or cash buys. Most of the time, if a market's sitting around 30 days, it is a really heated market. And then when it sort of jumps up to, around 50, 60 days, that still shows that the market is really healthy, right? So, properties aren't selling right away, but, they're taking the best part of a few weeks to sell. But if you're an investor, definitely look at the days on market trends for particular suburbs and see how they're tracking, particularly those that are chasing short-term growth. If you see really low days on market, then you know that, it's a very heated marketplace there, and generally demand far outweighs supply. So then, you might be getting an immediate upkick there from a short-term capital growth point of view. So keep an eye on days on market. But in Cairns, we can sort of see there that trend has jumped up a bit, over the last sort of, 2 to 3 months. And who knows where this would go, leading on to 2023. If that continues to go up, then we're really seeing signs of a really cooling market here in Cairns. But so far, that's something to keep an eye on, I'd probably say, guys. So the auction clearance rate, Cairns, I probably wouldn't look too much into this, but it's good to have a look at it anyway. It gives us a small indication on how the market's performing, but not a great insight. Generally, like the capital cities, Brisbane, Sydney, Melbourne, where auction clearance rates are a really good indicator as to how the market's performing, and to really check that marketplace. But here in Cairns, it's just not, as you can see, the clearance rates are generally all quite low, which essentially means that, most of the stuff that goes to auction barely sells. So it's a very hit and miss marketplace, but it doesn't probably give us, I suppose, a lot of evidence to sort of diagnose how the market's going on. But I think it's worthwhile bringing up, because I suppose if you have, here low levels of, properties changing hands at auction, that might even present opportunities, particularly for those that are looking to buy, because a lot of properties are getting passed in at these auctions. So if you're a buyer, maybe it could be worthwhile turning up at an auction or two and throwing your name in the hat for one of those properties, because I think based on the turnover rate, I can imagine that there wouldn't be a lot of demand at these auctions, hence a lot of these properties being passed in. So that could present a really good buy opportunity for those that are looking to buy a property. But it's a really hit and miss auction market in Cairns, and I think we're likely to see that trend continue, over the next few years. Um, yeah, that's the auction clearance rate, guys. So when you look at the overall demand, overall supply, we can probably see that the absorption rate, particularly for dwellings, and I'm talking about houses here, sits at around 75% right now. And it's probably down the best part of 5% since May to July. But that essentially means that out of all the properties that are going onto the market, 75% of them are getting chewed up and swallowed, and they're being bought. So if you're, considering selling, then there's a 75% chance of, if I go to market, my property is going to sell. So there is a healthy, I suppose, absorption rate here of properties that are going onto the marketplace and then changing hands. And as you can see here, there are between August to October, there are a total of 776 listings and 585 sales. So that gives us sort of this percentage of 75%. So yeah, as I said, for those that are considering selling, then you've got the best part of a 75% chance of, your property, changing hands. And that's a really good, healthy market. That trend, as I said, it's dropped from 80 to 75. That is probably something to watch. If that continues to trend down, and I'll be doing another market update in the next few months, probably around March, because we'll have some historical data by then on how the market is performing. If that's sort of dropping from 75 to 70, or down to 65, then that sort of goes to show that, I suppose, even more that the market is cooling and we're not seeing as high absorption rate. But so far, sitting at around 75%, the market is very healthy, and the absorption rate is looking very good for Cairns. From the rental side, if we poke our head over the rental side and look at what's going on there, we can probably see here that the median rents continue to follow, the rising trend that we've seen, and this is probably, evident across the country, and we've seen in the federal budget, this, I suppose, mass push for affordable housing or social housing to just alleviate a lot of this, I suppose, rental pressure that's happening throughout the country. And you can throw Cairns in the same boat. Really, really low vacancy rates, and I'll get to that in a sec. But we can actually see that the median rent over time, well, since 2017, just continues to climb, right? And it's now sitting at $498 there exactly. And who knows? We don't have a crystal ball, but if some of these fundamentals or key data metrics remain the same as to what's causing all of this, then we're probably likely to see this trend continues. But if we looked at since August, the median rent has actually jumped $10, right? $10 over the best part of 3 months, so that equates to 2%. So if that continues to happen every 3 months, then on average you're likely to see a freestanding home rent for $40 more each year if there isn't supply coming onto the market to relieve some of this pressure. So that's pretty alarming. So if you're in a renter, you gotta be prepared there, particularly for some bumpy rides ahead. From a cash flow point of view, from a finance point of view, dipping into your surpluses to keep a roof over your head, which is pretty alarming. And the vacancy rates is very reflective. These vacancy rates are sort of what's driving that median rent. And as you can see here, the trend since 2020, it's just continuing to trend above 1%, and it's now sitting at 0.6%, right? And in a city of Cairns, that has over 150,000 residents and a growing population, and a short-term population and a long-term population that are inbound all the time. And when you have the best part of 81 vacancies on the marketplace at any given time, that's a recipe for disaster. And with that population base, it's just not enough. That level of supply there from a rental point is just not enough to sustain that ongoing demand. So we might, and if this continues to go down, who knows what will continue to happen. in terms of prices, whether the government will step in and do rent freezes, what they're proposing, or whether renters have to continue to dip into their back pockets because the market is just moving in this direction that continues to create pressure, and then pressure creates these rises in rents. So yeah, that's really alarming, and it's probably the lowest it's been over the last 2 years. So if you're an investor, I suppose from a yields point of view, now's probably the ideal time, particularly for those that are chasing positive cash flow. The yields are very good right now, so you can come in, buy a freestanding home, and most likely have a positive or neutral asset there that you're holding, because these vacancy rates are so low, rents are so high, and then if you look at purchase prices that are relative to some of the rents, then you're most likely to find a really good positive cash flow property across different market segments of Cairns. So yeah, that's the vacancy rates, guys, and it's something to probably keep an eye on over the coming years, and as well as weeks and months. So if we sort of look at what's in the pipeline, particularly to take some of that stress away from, I suppose, the rental side of things, the median price of rents growing, the best part of $10 every quarter. That's alarming. So what would need to happen is new supply come onto the marketplace to alleviate some of that pressure, right? And if we can see here from a building approval point of view, a total of 220 building approvals for 2022, and it's actually been the lowest it's been over the last 10 years, which is really alarming actually, because if you looked at that, if the number of new dwellings that are going to come onto the marketplace that's approved this year, likely to sort of come on in the next 1 to 3 years, because it'll take, these are approvals here, so generally after approvals, developers will then have to, mobilize finance, arrange construction, and generally supply then comes onto the marketplace, generally 1 to 2 or 3 years after the approvals have taken place. So given that there's been low levels of approvals, particularly in this year, we're likely to see, further, I suppose, tightness in the marketplace from a rental point of view, in the next, 5 or 6 years here, because there's been a lack of, pipeline approvals here. But what we might see, given that there's been some high approval rates over, 2021 and parts of 2021 to 2022, 700, over 1,000, we're likely to see this supply come into the marketplace, early next year, early 2024, to create a bit of relief and take a bit of hit out of that rental market when you have, a whole bunch of new apartments, townhouses, large-scale subdivision house and land packages. That would then alleviate some of the pressure off of the rental market, but it also take pressure off of the buy side as well, right? So the more supply that's going to come to the marketplace, it would relieve some of the pressure off of some of these parts of town where supply is really low and people are fighting over property, causing these median prices to continue to trend north. So we're probably likely to see some new supply come into the marketplace in the next 1 to 2 years to take a bit of short-term relief off of the rental market as well as off the buy market. But I can't really see much changing in the medium term because of these low levels of building approvals, and that's something to watch over the next few years. If these levels remain low, then Cairns, I suppose, from a long-term point of view, I'm talking about past 5 years, to the next 15 or 20 years, it could be in a really grim situation here if these levels of supply remain really low. So if we were to summarize, there's a lot of information there, a lot of data, and it's probably a lot to swallow, particularly for mum and dads or just novice investors. But I think the data is the best way to sort of break down what's going on in the marketplace. Data doesn't lie, and we can see in real time sort of what's going on rather than rely on, generally what might be seen as anecdotal perspective or news that tends to be, biased in some cases. So if we were to summarize everything that we've just covered off on there with a couple of high-level points or key takeaways for you, the first around, the median price, I suppose the key summary for us or the key takeaway would be that, if the high-end market slows down, because that's the thing that's going to be continuing to pull up the median price, right, is properties that are transacting above, 674,000, which I think was the median price. If they continue to transact, and the market, let's say above 700,000, continues to be hot and heated, and most of those properties are generally on the northern beaches of Cairns, with the higher price point in those higher price brackets. If they continue to transact, they're going to continue to drag up that median price. However, if that tapers off, we might see a slowdown there in price growth, and we might even start to see a retraction on the median price trend and its growth rate. So that Cairns and the median price is really reliant on the high end of the market continuing to claw away. And what we're seeing, I suppose what my office is seeing, is we're actually seeing a slowdown of the properties that are transacting over 700,000. Over the last 24 months, properties that are on the northern beaches of Cairns were snapped up in a day or two, 40 or 50 bidders at a time, hundreds of people at open homes, and we're not seeing that as much now. So when the higher end of the market, with the higher end of the market slowing down, we might see that median price start to taper off or retract. But in saying that, if you see the northern beaches of Cairns and some of these more some of these suburbs where the pockets of town are a bit more expensive or above that 750,000, if a lot of people that wanted to buy into them are now priced out, they're going to be looking into these other markets that are below 600. So we might see a surge in these affordable areas, like on the inner middle ring of Cairns South, further Cairns South and the inner middle ring of Cairns North. We might start to see those sub $600,000 markets start to surge along now as well, because people are now priced out of a lot of these other parts of town where they wanted to live, so they're moving into these more affordable areas. So that could be something, if you're an investor, to maybe look at, and if you're a home buyer, just to be mindful of when you're looking to buy. So number two, I suppose, from an inventory point of view, so if inventory levels and listing volumes continue to drop, we won't see prices drop because supply is still very low relative to demand. So yeah, going back to the first point, if we're going to see a retraction in the median price, that means that there's going to be, I suppose, a natural tapering off of properties that are selling higher than 700. If properties selling higher than 700 taper off, then we're not going to see that growth. However, if there is a lack of supply of properties that are over 700,000, right, and this inventory level continues to just trend down, where there's not a lot of high-end properties that's going to drag up the median price transacting, then we're probably not going to see a change in the median price, because there's just not going to be enough supply. So when you still have pent-up demand, then you're probably still going to be in a situation where people are going to be competing for properties. Let's say in Palm Cove, a property goes on the market in Palm Cove for $1 million, but there hasn't been one that's gone on the market that's been $1 million for the best part of 6 weeks, and it comes on, and then there's 20 people fighting over that one listing, then we're probably not going to see a retraction in the median price, because inventory is so low relative to the demand. So that's something to keep an eye on, guys. Another diagnosis here, or summary of the trends, is with the jump in days on market, as I said before, it could be an early indicator that the market is showing signs of cooling. So yeah, if the market historically has been turning over roughly around 30 days on average, spending 30 days on average on the market, and now jumping to 54. We just need to watch that as a data metric to see how that's going to play out over the next, coming months, to sort of really give us an indication if the market is cooling. But despite that, around 50 days, if it stays at around 50 days for the next 12 months, that's not a bad thing for Cairns at all. That just goes to show that the market is in good balance, right? It's not a complete frenzy out there where people are fighting over properties. So, when it moves to around that 54 days, and if it can stay there, that's going to be a good thing for Cairns. There's going to be a really good balanced market and not an imbalanced market. So something to look out for. From an auction side, it's a big hit and miss type of market here in Cairns, and not a great indicator as to what's going on, as I said. But in saying that, it could be a good opportunity for buyers. So given that there is I suppose a low turnover of properties that are selling at auction. That presents, I suppose, some really good potential opportunity there for buyers. And we've gone to a number of auctions this year, and to be honest, the rooms haven't exactly been full, and active bidders at any given time, only the best part of 4, 5, or 6 people, for a lot of properties that we'd probably deem to be good deals from an investment point of view or from a home buyer point of view. So that might be something to consider if you're a home buyer in Cairns, to show your face at 1 or 2 auctions, just to sort of get a bearing on what's going on and maybe throw your name in the hat. Just on the absorption rate, so a key takeaway is that if you intend on selling, in the next couple of months, or you're deciding whether you should sell or not, and you're sitting on the fence right now, the absorption rate is sitting at 75%. So regardless, there is a 75% chance right now that if you go to market, your property is going to sell. No matter what price point you are, data is telling us that every property that's going onto the market, there's a 75% chance of it selling as a whole. This is aggregate numbers across Cairns, but there could be, I suppose, different suburbs, different property types that might, the absorption rate would look a lot different once you sort of, peel back the layers of the onion. But as a whole, this is a good metric to give you, particularly as a seller, some really good confidence that, hey, if I do go to market, there's a really good chance of my property selling. The absorption rate is really high. So that goes to show that there's really healthy demand, in the marketplace right now with that absorption rate. And that's, if that absorption rate continues to maintain, above that 70%, then we're probably actually going to see, that's actually going to give a lot of developers confidence as well in the market that it's strong. So we might see a lot of new building approvals, and a lot of new developers probably look at starting to invest in Cairns, whether it's medium density, whether it's high density, or whether it's house and land packages out, in some of these growth corridors. So yeah, that's something to keep an eye on as well, that absorption rate. From the rental side point of view, yeah, and a key insight here is that if vacancy rates continue to plummet without the new supply to take some, I suppose, pressure off the market, to give the rental market some relief, we're just going to see the status quo continue. So I think we're probably going to see, the best part of rents continue to grow as they are, $10 per quarter, if there is no new supply, and the alarming thing is that there's been low levels of building approvals this year, so we're most likely to see history repeat itself in the next 5 to 6 years in Cairns with vacancy rates and with rental growth. But one thing that we can be optimistic about is that, in the previous slide where I showed, the building approvals, particularly for 2020, 2019 and 2022, are really high. So that means that new supply would most likely come onto the marketplace in the next 1 to 2 years. So that could take a bit of short-term pressure or take a bit of short-term heat out of the marketplace. But yeah, we're not seeing a great deal of supply come onto the market. So yeah, if you're a renter, buckle up. If you're an investor, I suppose you're just cashing in, unless the government steps in and provides some cushion for investors, for renters, and puts a rent freeze in place. But I can't actually see that happening anytime soon. So yeah, guys, that's sort of what's happening in the Cairns marketplace. Very data driven. We got down and dirty in the data there, but I hope that was very insightful. Gives you a really good indication of what's going on the supply side, on the demand side, on the supply side of the rental market, on the demand side of the rental market, and then what the future is likely to look like from a supply point of view, and paint a picture of how the market might look over the next 1 to 2 years as well. But yeah, this has been brought to you by Tropical Life Buyers Agency. My name is Troyson Basani. If you like this video, and you have any questions, feel free to reach out to the office or leave a comment in the comment section. Happy to answer any comments. And please note that this is aggregate data, so this is just looking at Cairns as a whole, a bird's eye view of Cairns and all of the data of Cairns. If you're an investor or a home buyer and you're wanting to buy in a particular suburb, My recommendation is that you look at the individual suburb and take a deep dive into that suburb individually and look at the similar data points that we looked at today. Look at the supply drivers and look at the demand drivers and sort of weigh up whether or not it's a good time for you to be selling right now or to be buying in that particular suburb. So I hope that's added a bit of value, guys, and good luck with your next purchase or sell. Bye for now.